Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. Welcome back to the show, Rick.
Thanks much, Jim. It is always a pleasure to get together with you.
Rick, could we describe what's happening right now as a Santa Claus rally?
Yeah, I always love that Santa Claus term because it makes it pretty clear that this country is all about just let's buy lots of stuff and maybe we can keep the economy floating. So the Santa rally is a pretty pathetic concept. It just it makes it very clear that we're all about consuming and not about investing at all. So the Santa rally here is not a Santa rally per se. I've been out to some of I'm in Charleston, South Carolina, and they have a pretty upscale retail area called City Market, and it's 4 low brick buildings that are open on the end, so it's kind of semi-outdoors. And they sell some good stuff, very, very high-quality goods, and including the local staple, which is these hand-woven baskets that go for upwards of $400. So, when I was there over the weekend, and this would have been the big shopping weekend of the year, they were doing good business, but not great. And I talked to a few, of the vendors there, and that's what they told me. They said, they're selling, but it's not exactly the best, Christmas, season they've had. But, again, I'm saying that the Santa rally is not so much related to a retail picture that even for the optimists remains so-so, but how the market is playing off against Omicron.
Mm-hmm. Now, are we topping out? Are we going to see a correction or a crash in the new year? And if we are there any warning signs that will let people know it's time to get out of Dodge?
Well, I'm pretty certain that we are in a topping process. It doesn't make me feel good that pretty much every competent technician that I know, I keep up with a lot of guys. I have friends who do pretty well at forecasting. Bob Hoy is one, Peter Eliades, Garrett Jones. Anyway, we're all pretty much agreed that the market is topping here. And when you have such a consensus like that, you understand that Mr. Market's going to do his diabolical best to make it costly for people, even if they're right. So we're all sort of on top of a top, but the market is kind of thrashing around in part because everybody knows it's coming. And number 2, because when the bear market finally does begin, it's going to usher in, an environment economically and financially that is almost beyond imagining. So when we go into a new era, well, you can believe that the market is just, it's doing its best to keep the illusion and the delusion going. But so that's, I think, is one reason why we're getting a very complex top.
Mm-hmm. Now, for many traders, they've never experienced a down market since the big crash in 2008. It's been nothing but up, and up with some minor corrections along the way. Will they know how to react?
No, they won't. And the big concern, and when you talk about how they haven't experienced this or that, what they haven't experienced that's going to be most crucial is a total absence of liquidity. And I'm trying to impart this to my son. My younger son lives in Utah, and he flips collectible sports cars, high performance cars, and he's had as many as a dozen of them in inventory at one time. And he recently sold his interest in a partnership, and he's got a couple of these cars. He deals in Supras. It's a high performance Toyota that was made in the 1990s. So I'll say to him, Dan, you don't even experienced anything like it, but you're not going to be able to sell these cars come a certain day when the market takes a header. And he said, no. I mean, I know who the buyers are out there, and I could flip these things in a week. I could probably turn 3 or 4 cars. He knows the market really well. So, and the price of these cars, go anywhere from, you get a low mileage, 20,000 miles, for a car, mind you, that's 25 years old. And the prices go anywhere from, let's say, $40,000 to $250,000. So, so he said, I can get my money out of these cars. He kept one for himself that would probably have a value of maybe $80,000. And he says he bought it so well, so cheaply that he would have no trouble. There's 10 guys out there who would die to have that car for 10 or 20,000 more than he paid for it. So I'm telling him not only that he's wrong about that he's going to experience something that he has no imagination of, but that car that he thinks he could turn for $80,000, he may not even be able to sell it for $5,000 if he's a couple days late, in this, when the market finally takes a dive. And so you can extend that out, I think, for sure, to the Bitcoin world. Everybody's sort of trading Bitcoin, not even acknowledging the fact that it's a creation of, it's just pure speculation. There's very little transactional value or use in Bitcoin. Everybody's just sort of holding it, buying it, trading it, to make money speculatively. And it reminds you of that old joke about, these aren't eating sardines, these are trading sardines. So all the Bitcoin out there is, none of it is eating Bitcoin, it's just trading stuff. And when you take the list of the top 100 or 200 cryptos and think, well, some of these are going to survive, even sorting out, if you hold some of these blockchain currencies, the coinage, sorting out which ones are going to be viable in itself will be part of the liquidity crisis, because nobody's really going to know which coins are going to hold up, if any of them do. So that's going to be a liquidity problem. But that's the whole deal. Everybody's sort of going for the exit at the same time, and we haven't seen that in a long, long while.
Is part of the problem going to be the record margin debt? Because people are going to have to pay those bills.
Sure. Everybody's in hock up to their ears. And I can't remember. We may have talked about this the last time, but a buddy of mine he's a financial advisor to very, very wealthy people, and he was talking about the real estate market in Aspen and other very ultra-luxurious ski resorts. And people are coming in, they're paying $5, $10, $15 million cash for a lot of these homes, $5 million for a fixer-upper in Aspen, and the realtors are thinking, boy, there is so much money out there. But the fact is, they're borrowing from their securities accounts. These are, let's say, Morgan and Dean, Goldman. They will all loan their clients money against securities they hold in what are essentially investment or trading accounts. So the homes and the people buying these homes, they're doing the right thing because the money is getting loaned to them at less than 2%. So they get it in a form of cash, which they give to the broker, but it's technically a loan at under 2%, from their broker. And margins are pretty good. With an $8 million account, I think my buddy said you could borrow $6 million just like that. But nobody seems to realize that that the home could be part of the margin call that they're going to face when stocks start turning down and their securities go south. So we've got huge leverage then in a market that's probably viewed right now as absolutely impermeable, invulnerable, invincible. The high end residential that you find in ski properties.
So what do you think we should be doing right now? Everybody's saying the market is topping out, but is it a case again of everybody's a little greedy? I don't want to get out too early and miss out on the last 5, 10, 15%.
Well, it's not entirely that, because there's the question, if I get out, where am I going to go? And if you look at the two answers that you and I have talked about over the last year or two, it's gold and treasury paper. And if you get used to the kind of returns that some of these private equity funds are throwing off or whatever, unless you're in Zillow, of course, you begin to understand, or you have to be skittish about going into the meager returns of treasury paper. And of course, gold has been such a non-starter for so long. So you'd have to be jumping out of things that are doing pretty well and into stuff that generally is regarded as crap these days. So it's a hard move to make. And so it's not entirely greed about wanting to milk the bull for the last ounce of gains. It's also like, where am I going to go from here? And you have to take quite a haircut to get into what I would call safe.
Mm-hmm. We'll have more with Rick Ackerman right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, do you have some target marks that tell you this is the peak that you suspect would be?
I'm very specifically focused on two symbols, the E-mini S&Ps, March contract, and Apple shares. And the targets respectively are at 4909.75 and 187.93. So a couple of weeks ago, they were perfectly synced. Each needed a 4.5% rally to get to that target. With the Omicron spook, they kind of went out of sync. The Apple fell pretty hard and needed a 10% rally to get to that 187.93, and the E-mini S&Ps only needed a 5% rally. So they've resynced. I think they're still pretty close, and there's still a question in the final stage of any long-term move. It's not unusual for a particular vehicle to miss the D target of my ABCD pattern that's central to my trading and forecasting method. So I'm not sure we're going to get there. We could have a failure just below it, but the way things are looking now, the market's in a pretty strong rally today. It's basically at the point where it says Omicron, Schmomicron, even if the official story out there is we've all got to duck and cover here. That's the Fauci line. But Wall Street has just read it so far as a non-event, and that's notwithstanding the fact that the usual lunatic blue state governors like de Blasio is still in charge, and Gavin Newsom are in lockdown heaven for them. So the fact that what few businesses have survived so far are going to go down this time, the market doesn't care. The market's never really cared about business or the economy or profits or anything else. It's just sort of a creature of monetary expansion. So anyway, that's the targets that I mentioned for the E-mini S&Ps and Apple come from pretty long-term charts, and they're very clear. So I have absolutely no doubt that if either of them or both of them get to those targets, they are not going to simply chomp through them and go higher. There'll be a top somewhere very close to them, and because of the time frame involved in the charts, I'm expecting it to be a very major top.
Mm-hmm. Now, of course, timelines are very hard to pick. So are we a week away, 2 months away? Because everybody I've talked to feels we're going to charge in hard into the new year, but it's going to falter after a month or two.
Well, to take as our benchmark the slope of today's rally, we could get to those targets. I don't think we can quite get there by year's end, but yeah, I would say within the first 2 weeks of the new year, those targets could be achieved. Okay,
so what's the scenario after that? What are we going to see?
We're going to see people not concerned so much about certain products being in short supply on grocery store shelves, so much as they are concerned about where their next meal is going to come from. That's not going to happen overnight, but I think that's where we're headed. When I said earlier that this bear market is going to usher in a deflationary catastrophe that's almost beyond imagining, I'm putting it down at that level. Like, where is my next meal going to come from? And we did talk about some of my colleagues who've been shifting the emphasis of their commentary in that direction. I'm speaking specifically about James Kunstler and Charles Hugh Smith. They're talking up their gardens and how they're they're growing a lot of stuff on their own properties that would be things that they can eat in a pinch, and James Kunstler sort of extrapolates out a bigger picture where cities are going to survive only to the extent that they don't have to import food from afar, and it may, as he suggests, revive some of the riverboat cities along the Mississippi, for one, that can be serviced, that can be supplied by boat. So I think we're really going to experience some hard times along what we had in the 1930s, but worse, because the population by and large was more resourceful then, more self-reliant. About 30% of American workers were tied in some way to the agricultural economy. So you might say that back then we were literally living off the land, but now jobs have become so subspecialized that we don't even know whether people who do certain jobs make an actual contribution to the economy, and we're about to find out.
Rick, thank you so much for chatting with us, and have a great Christmas and Happy New Year.
Thank you very much, Jim. This holiday is, I guess, an important one for people in their own lives. We've just had so much coming at us that it's good to take a step back and just kind of enjoy your family and do the things that are so good that we can all still enjoy in the holidays.
Well, in Canada, it's pretty well you're stuck with your family for Christmas, and again with the Omicron thingy. Stay home and play with yourself, I guess.
Well, I hope it doesn't come down to that for you and I, for you and me. But anyway, you have a happy holiday, and I guess next time we'll talk, it'll be 2022.
Thanks again, Rick.
Take care, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.